So my name's William Witzke. I have Allstate offices in Auburn, also Grass Valley, and we took over an agency in Truckee. We don't have any location up there right now, but that may change, and that's part of the reason that I'm here. This is Detra. She knows everything and anything about California FAIR plans and anything to do with home insurance. I know it's a lot of stuff. So I'm going to go fairly quick through here. It's a little bit upbeat, right? So before I start, raise your hand if you're on the California FAIR plan. Raise your hand if you have State Farm. Raise your hand if you have Allstate. Who's your agent? In Folsom. There's a few there. Basioco? Yeah, I know those guys. Good agents. So those of you with State Farm and Allstate, mainly Allstate, you're paying below rates right now for your homeowners. State Farm, they've had a few pushes there, but you have a very good policy. Those of you with the FAIR plan and also a DIC, I'm here to talk to you about you and actually tell you that having the FAIR plan for the first time in many years is probably a good thing for you. I see that look. All right, so we're going to talk about a couple things really quick. The main thing I'm going to talk to you about is competitive market. So we haven't had a competitive market for homeowners policies, homeowners insurers in the state of California really since 2009. Remember John Garamendi? Yeah, so he was the insurance commissioner and he forced a whole bunch of insurance companies to take major deductions in their homeowners. You may not have noticed it on your Allstate policy, but they made that Allstate policy take a 36.9 deduction in homeowners. My policy in Newcastle was about $1,100 in 07. When it renewed in 08, it was $710. It went down that much. I was senior management with Allstate then on the investment side. Our cost was 92 cents on the dollar. Now we get 65 cents. We stopped selling homeowners all through this era. We stopped it. Other companies still did. When they hit the other companies, they non-renewed. AAA non-renewed tens of thousands of policies. The Grange non-renewed everything. Travelers non-renewed everything. They're like, we can't stay here and lose that much money. So those that stuck around, it's kind of a good thing, but it's very rare. We haven't written a new Allstate homeowners policy in our area, forever, right? We opened up a little bit in 2019 and then some things happened at close. And we've had all these fires, all these other things going on. So it's been a mess. If you talk to people in home values and how your home values might be dropping because of the cost of insurance, people that want to come up here, I'm here to tell you it's going to change. It's still going to be more expensive than what it was, but it's not going to be what we have in the FAIR plan and the difference in coverages. So it's going to get better. And I think it's going to get better next year. So I'm going to hit pretty quickly, but it's going to be different, right? In the old days, before 2008, you could buy a home and be an escrow and go, oh, I don't have insurance. You could call 10 different companies. Price is about the same. It's who you liked or whatever. 5 minutes later, you had a policy. It doesn't work that way today. So back in April of 23, Gerald Zimmerman, he's a lobbyist attorney for Allstate. He was at the Hoover Commission. Bob, you probably know the Hoover Commission. And he made this statement. He said, if we could have the net cost of reinsurance included in our premiums, we're the only state that doesn't allow an insurance company to actually have some of its expenses. A very expensive part of their policy is reinsurance. Does anybody here have an umbrella policy, a personal umbrella policy? Pretty much everybody here should have one. If you don't, if there's a major accident you have with your car, it goes above and beyond all the other coverages to protect all your assets. That's what reinsurance is for the homeowners industry. If they don't have enough funds, they buy extra insurance that kicks in at $10 billion or $2 billion so that they don't go bankrupt so they can pay. You want them to have that. California has not allowed that to happen until recently. The other thing he said, if we could get forward modeling. So forward modeling for catastrophes is where if a drought is coming on, they can go, oh, we need to raise rates. There's more alarm, right? We couldn't do that before. We can only look backwards. It's very, very important. So he said, if we had those two things plus premium for the risk, right, we would start writing in nearly every corner of California. And then like all politicians, he said, let me repeat myself. If we could have forward modeling, if we could have a net cost of reinsurance, we will start writing. We got the forward modeling in December 13th. We got the reinsurance from the Department of Insurance December 30th. And we're ongoing getting premiums. You saw your premium increase with Allstate? November 2nd, we had a 34.2% increase. What's that? It did. Okay. I'd have to look at that, but okay, good. What he said was his actually went down last year. The year before it went up. So they're all going up. Those of you with State Farm, there's multiple increases that are going through, right? So we're seeing that. It's still a lot less. It's still half of what the fair plan is. So we got both of those last December. We're getting the rates now. I'm not going to go through each one, but there's been major increases since 2019, almost 400% increases in some areas. A lot of that has to do with some of the fair plan, right, as well, coming in there. They tend to exclude that in some of the statistics. These are actually published companies, but they're getting the rates. It's all coming along, right? So they have everything. So the next question is, when are they going to come back, right? I think they're going to come back end of first quarter or second quarter next year. Yeah, that's what I think. Do you think it's going to be different than what we used to do? How many of you have had inspections done, right? Defensible space inspection you have to do, right? Anybody here farmers? Yeah, did you get the notice from them, from farmers, where you had a little letter you had to write out, and if you didn't check out correctly, it non-renewed you, but then you'd be a wildfire prepared home and you could do it? Yeah, that's the future. So the reason I said that the California Fair Plan being on it is a good thing, state of California says they want all insurers to prioritize California Fair Plan policyholders. So you're in front of the line when they start writing policies. They have to prioritize you. For the first time, I have good news about having a fair plan, and that's you're the front of the line to get off the fair plan. The next thing, and you guys already have this, is Firewise communities. Firewise communities are a national kind of a political thing under OAS and some of the other pieces. So they believe it's really important. And so they push that. So if you're in if you have the fair plan and you're in a Firewise community, you're at the front of the line. So when they start writing again, there's a couple other things I want you to do to get right there, because there's going to be a lot of people rushing, right, to get that off the fair plan and get a plan either with Allstate, Progressive, Mercury, Farmers, State Farm, what it is, right? Part of the regulation, we're the first state in the country that says we will give you property specific discounts for fire hardening. You already get one for Firewise. It's already there. Fair plan 7% roughly if you're in a Firewise community. But they have specific things, 0 to 5 feet, you know, all those types of things that you guys are aware of. So remember this slide. So this was April of 23. So when this went out, this came from Bloomberg, and it hit all the news wires. Our office got crazy with phone calls. I want to have an Allstate policy. Can I have it? I saw on the news they're going to start writing. My staff said, we're going to be really busy. During that time, I was dealing with 900 inspections on our properties that need to have 0 to 5, the vents, all these other things. And I'm like, do you really think they're going to let me write a brand new policy when we're threatening to non-renew people unless they do the basic fire hardening? So I've been working on this for a while. What should you do now? Well, you've already got this. You're in a Firewise community. There's probably a few more things and pieces you need to have, right? You have this, Firewise, right? You know what this is? Are you familiar with IBHS, Institute for Business and Home Safety? Remember the old commercials where you see these cars crashing and dummies in it, and it's done by an organization? That organization that did that, they actually work for all the insurance companies. And what they're testing for is what's the survivability and injury of these cars, because they don't want to pay out claims for bodily injury, right? So IBHS, if you've ever seen a building on fire inside of a warehouse, that's IBHS. They have a facility in South Carolina. And I've been there. I recently had like a procedure where they did where they put you out for a while. Yeah, names. kids, stuff like that. It kind of goes by me. I've actually been there. So they have 110 7 feet by 7 foot fans that can blow up to 140 miles an hour, and they light things. You know what I'm talking about? These things where they're shooting with embers, they light a bush and all that kind of stuff. I'm on a first name basis with a lot of the best wildfire scientists in the world. And it's primarily because of my beard, so they remember me. But I've been there, I've seen the science. So IBHS has created a defensible home hardening designation. It's not CAL FIRE. It's not somebody else coming out and saying, well, I think you're going to be okay here. Or I think this is going to be all right. And it's $125 to do it if you're going to do it yourself. So here's the website. And I've got this little thing here that I can control with my hands. Over here, I'm going to show you a little bit more as we go through. And well, I'm sorry, I'm not moving here. I'm pulling your leg. I'm not actually controlling that. I recorded this ahead of time because I wasn't sure. So I'm going to have a piece that comes up, but it's wildfire prepared home, and I'm going to have a barcode for you to read. Right. So look at all these companies here. State Farm had Murray, USAA has AAA, all these things. They're already using this program. It's automatically linked in with the insurance companies. When Allstate does an inspection, when they did your inspection, it costs about $200 for that inspector to come out, third party. Then we've got underwriters. They've got me in the office trying to figure it out. I had another half-time person. All she did was wildfire inspections. It doesn't cost the insurance companies anything to use this, and it's very accurate. So I brought up for this slide to be last. There's a couple pieces here. It's a standard do-it-yourself. And then if you want some help, there's a full service that you pay more. But for $125, you'll go to this site, and this is the standard. I actually signed my home up. That's my address up there if you want to visit me. I don't know why I'm pointing it there. Isn't it silly? We're going to give you a link to get to it. Want to advance it for me once? There we go. So once you get there, this is how far I got on the application, right? And I can stop it at any time. And there's a checklist of what you need to do. It's pretty much the basic things: 0 to 5 vents, 1/4 inch or 1/97 inch smaller, class A roof, 30-foot deals, stuff like that. They have 2 designations. I'm suggesting what you should do now is work on the very first designation. The second designation, the only reason I'm saying don't do that, it requires you to have your eaves boxed in horizontally to or vertically horizontally to the ground. So if you don't have that, don't worry about it. I'm not saying you need to do it. I'm going to get to questions right here at the end, but work on the first one. Start working on this now, because what I believe is going to happen when I start writing homes again, or Farmers or State Farm, they're not going to bind that home and then have 60 days to come and inspect and go, well, they don't have the 0 to 5. She really loves her bushes that are here and these other things, and then it get kicked out. They're not going to let me bind it without this. It makes so much sense for the property managers, for the insurance companies. They save money. Once you get the designation and you go through, there we go. So this is the other service. You can actually have somebody come out for $149. They'll talk to you on a 30-minute Zoom, kind of go through the issues and stuff. For $600, they'll come out ahead of time, walk your area, tell you specifically what to do. There's many times I've seen people working on things that did not make a difference. They spent a lot of money on clearing things out here. Start from the house, work their way out, all those things. So it may be worth it to have somebody, and they are certified by IBHS to know exactly what you need to do to qualify for that. So I wasn't sure if I was going to sign up for one of these or not yet. I think I know some of these inspectors, so I'll probably spend the money and have them come to my home. Yeah, I'm probably leaning to this one only because I want to see it firsthand, what they do. Madrone is one of the companies that does come out, and they're very responsive. So my understanding of it, if you want to do it yourself, it takes a little longer. First, you do a self-assessment, then you take photos, but they have their directions to do. Then you upload those photos. Then once that's done, they look at it and go, yeah, everything looks good. Then you get down for an inspector to come out within the next few weeks. And now they're coming out and looking at it. You have enough time. You could try the DIY, right? Yourself, see how it works. We got time. right? 5, 6, 7 months now. Start with that process, go through that. If you start having trouble with it, then have one of these guys come in and do it. That's my current. I haven't had them to my house yet, but that's what I'm thinking. Here's the QR code. Are you guys familiar with QR codes? I've got the website right there too. If you just simply put in wildfire prepared home, it's going to bring you right to that website. Did everybody get that? I'm so sorry. I'm going to have it up at the end as well. So I'm going to take questions specifically about this, and then the lovely Detra is going to come to you, raise your hand, and we'll get it for people on Zoom. Make her run.
I noticed with the name of the insurance companies, that you did not include AAA.
AAA's coming on it. My personal, I've been
Yeah.
in the insurance business. My background's financial advisor.
Yeah.
My degree's in finance and math. But when I look at these numbers, every single major company, in my opinion, is going to do wildfire prepared homes. It's verifiable. Once you get the designation, the next year you recertify by uploading pictures again. And the third year, they come out and take a look. So when I was in South Carolina, I was surprised to see underwriters from reinsurers there. Reinsurers are huge financial worldwide companies, right? We're talking billions and billions of dollars that want to take on some risk in Africa and California and everywhere else. They were there because they're checking on the insurance companies to see how well they're providing what their risk is, if they really understand what their risk is. This program through IBHS is really going to define that specific property mitigation and resiliency than anything else that's ever been available. So I'm pretty excited about this. Great question.
I have Liberty Mutual, and you didn't mention them either. They doubled I kept opening. I know, I kept, praying on the envelope every year. And this last year, they doubled me.
You pray on the envelope before you open
Yeah,
it?
before I opened it. Please do not. And they
They finally got you.
Yeah.
Yeah. Part of it, I'll just say really quick, is we have Prop 103 that was passed in 88, and it basically really tied the insurance companies to how much of an increase they could ask for. But there really wasn't parts in there where they could get approved. So I feel a little bad for Ricardo Lar. He's our current insurance commissioner. This is his second term, but he didn't approve a single rate increase during his first term. So these companies just losing. They have him in there. It shows that they need him. And they're like, yeah, we'll get to it. We're busy. Oh, it's cold. That type of thing. So in his second term, I give him credit, man. He is trying to fix this thing in a lot of different ways. So like I said, my premium was $1,100 in 07. And when it renewed, it was $710 in 08. And then I had a 58% increase in 2023, I think it was. And I went up to because it only went up a little bit, right? I was paying $2,200. Right. And then we've recently had that increase, and I'm up in the $4,000 range, close to it. But it's still, the fair plan for my home is nine. You tell me, Detra, what's my home? At least 9,000 plus the DIC, and for the fair plan, and it's not even close. When we had all our increases, I average about 80% on all my homes. I've had some go up quite a bit. I've had some in Truckee actually go down. They have Measure F up there, and it's just a fantastic fire community, and they do a bunch of the stuff. They have funding and everything that they passed in 2019. I saw a bunch of Truckee homes go down by 19 or 20%, while everybody else was going up by 70, 80%. So this kind of mitigation will work, and it will help on your premiums as well.
I had a question about the eaves being enclosed soffit rule. Is there a minimum height that applies to?
Yeah,
or
great.
if you have 2-story eaves, do you still have to enclose those?
Yeah, great question.
Depends on the area.
Great question. So when Allstate first came out, they said all eaves must be enclosed. and I have a lot of Truckee homes. I have Truckee eaves that are 34 feet in the air. So the reason for that is that the heat gets trapped in there. I know a lot more about it now than I did before, especially around the dormer ends and gabled ends and stuff like that. But the heat's going to dissipate by the time it gets there. So I'll just refer over to Truckee for a minute with theirs, and they use a lot of fire science. So their rule was, forgive me, I'm usually good with numbers, but I believe it's 12 feet. It might be 15 feet. If the eaves were 15 feet or higher, they did not have to be enclosed. Now, current county, El Dorado County, I'm not sure, Nevada County, Placer County, they're not cut up. I had homes burn in the river fire in 2022, went out to visit them after they were built and the eaves aren't boxed in. And they had wood decks. I'm like, what happened? Right? We're going to non-renew you because you need to have these things. And we were able to get some mitigations and done. Allstate ended up changing their mind. There's a lot of us that were pushed and like, you're going to non-renew every single home I have. Maybe 1-2% have enclosed eaves, right? And they said, all right, if eaves are 10 feet or higher or second story, they do not have to be enclosed. For the IBHS, I do not know if they have a height on the eaves or not. I don't see it there, but I think that's a great question and I need to know the answer to that. Now, what Allstate said, if the eaves are not enclosed, we simply want you to move the 0 to 5 feet to have no vegetation.
So I've got that. I've got river rock around the house, no
Feature.
no plants or trees, and then some concrete walls. Can you hear me okay? That's okay. I think you heard me.
I did. Yeah. No, you sound great. You sound good. If I were you, I would do the DIY version. You can look at the checklist. You can go there. But I implore you, whether it's Allstate or Farmers or State Farm or AAA or CSAA, I believe AAA was definitely up there. They're already using this program, and I don't see a reason why any major carrier wouldn't just utilize, not Mark Twain, but utilize the IBHS wildfire prepared home designation. That's the thing I want you to work on right now. I give this presentation to all these different areas, most of which are not firewise. So my main piece I'm teaching people and the slides I have is, are you in a firewise community? If not, start it now. It's 4-6 months to get it going. You only need a minimum of 8 homes. So I'm educating people on get in a firewise so you're at the front of the line. While you're doing that, do the wildfire prepared home. Oh, sorry, right here, hon.
Very quick. On enclosed eaves, the 5-foot rule, is that changed? Is it 5 foot from the overhang edge and enclosed?
There's a few
I just
pieces.
had a landscaper argue with me when they planted within that 5 foot because, go ahead.
Yeah.
Listen.
So there's a couple of things that you're hitting on. One part there. So there's the 0 to 5 feet, right? So that is 5 feet from all exterior walls. Some of them include the deck. I think they should include the deck to be safe to be 5 feet out. So that's your barrier around. So no vegetation whatsoever there. And people argue about it, like, well, my house is bare to everything. 5 feet out, you put the stuff that you can't tell. And can you imagine? I think new building codes should be 5 feet all the way around concrete when you build that home. Can you imagine how easy it would be to take care of your house? Ladders, insects, you name it, right? And then have those things around the outside, dripping, splattering on your, all that stuff. So there's a couple pieces. Some of it's tree overhanging, right? And there's different pieces and rules on that. Generally, it's 10 feet above the roof or more, not touching certainly, but for sure on the 0 to 5 foot, that is outside, right? And you could have
From the wall.
Yep. Yeah, that's correct. That is correct. It's her statement was that's from the wall out, not from the overhang. And she is correct.
So my question is really kind of for Tanya. Tanya, did you bring any information on the CAL FIRE assessor program?
Microphone.
I felt like you were the expert on this. So Fire Safe Councils are trained. So CAL FIRE has a qualified entity training program. So they will come into communities and train people, primarily Fire Safe Councils, to do assessments for defensible spaces space and home hardening. So we just had CAL FIRE come in, do a 2 or 3 day. 2 day, it felt like 3. Just kidding. It was a fun 3 days, 2 days. And they come in and they train all of these assessors. So Kit, who just asked the question, well, actually, she's on the training cadre. You are an assessor. No? Bob. Okay. There are plenty. There are 120 new assessors that have been trained by CAL FIRE that will come to your house at no cost and go over all of what was just discussed as far as defensible space and home hardening. Like I said, we do have an ordinance that our office manages, but if we go out and do your inspection, we're going to enforce it. These assessments are not enforceable. These are voluntary for them to come out and for you to get education on what your defensible space is supposed to be and what the home hardening should be. Yeah, the recommendations, because there are no requirements for home hardening as far as law. As far as insurance, that's different. But if you want to get a head start on what insurance is going to ask you for, the assessments is a really good way to do that, is to have someone come out and say, this is the kind of vents you need. This is the soffits you need to enclose. This is the siding you need to have. This is what, and I just always want to say this. The insurance companies are trying to protect the same investment we're trying to protect, just for different reasons. They don't want to pay out on your home. You don't want to lose your home. So whatever the insurance companies are requiring us to do to be insured, it's what we really should be doing anyway, so that we don't have to lose our home and file an insurance claim. So I always try to, the spirit of it. Yeah. Your Fire Safe Council, back there, I brought some flyers. I brought flyers. They're on the back table. I am not Fire Safe Council. I just love the Fire Safe Council and work very closely with them. And on the back table, we made some flyers, and you just grab one and it has the assessments on there. Okay, good. I know you do. I'm sure you do. I can't believe you're not one. Yeah.
That's not. So just to be clear, that's a great start, but by the first quarter of next year or close to it, I highly recommend get the IBHS. And if they help you along that way and you can do it in grants, I just please do that. And that will just, because I think a lot of people that we're not talking to are going to think they get insurance, and now they're behind the 8 ball, right? And insurance companies have a certain saturation. If they get too many homes qualifying in, they're going to try to slow it down. So my hope is Northern California, the people that I talk to would be the very first ones that are getting their insurance back with an admitted carrier at a reasonable rate with great product, whether it's State Farm or Farmers or AAA or Travelers or Liberty Mutual, all those things. So I'm going to have Detra talk to you for a little bit. You spend a lot of money on the plan, DIC. Any questions, insurance, any questions, homeowners? She can help you with it.
Yeah, and also anybody online, feel free to ask questions.
Yes. And I'll be the one running around with questions. So just raise your hand when she's ready.
So can I ask a quick question? I don't know if you
Sure.
can hear me. Okay, so on that
Yes.
wildfire preparedness website, you pay the $125, and how long does that last? Or is that something you have to do every year, the 125?
No. So each year for the second year, you upload pictures again and they look at it and verify, oh, it still looks great. And then the third year, you pay the fee again, an inspector comes out and recertifies you.
So basically 2 years. It's good for. On the third year, you have to pay for it again.
And the
Okay.
discounts will
Thank you.
we don't know exactly what the discounts look like on this yet, but just getting the insurance is going to be like a 50% discount what you have now if you're on the FAIR plan.
But until then, those of you that are on the FAIR plan and even other insurance, State Farm, Allstate, Liberty Mutual, they all have the same kind of coverages. So I hear a lot of things all the time. There's a lot of miscommunication out there about different rules and regulations, especially with the FAIR plan and different coverages. So I'm just here to kind of overview it all. And then I have some other good announcements that just came out today from the FAIR plan. So they're not part of the slideshow yet, and they'll be effective November 15th. Is this really going to work? I'm okay. So I already saw most of you have the FAIR plan in here. So what really does it cover? So it does cover your house, and it's what it covers against and the losses that it covers against. So fire, obviously, but this is going to be any kind of fire. So kitchen fire, you leave a candle burning and the cat knocks it over and causes a fire. All of that's going to be covered under the FAIR plan. Same with lightning. We get a lot of lightning storms up here. There have been more lightning storms this year, I think. So lightning, that's going to be under the FAIR plan. Internal explosion, you have a gas leak in there and your house blows up. That's going to be under the FAIR plan. Also, which everybody should have on their FAIR plan, are these two little endorsements. They don't cost a lot of money. I've seen some people take them off to save money. They're literally like under $100 a year. So this is your wind and hail and vandalism and malicious mischief. Do you know in a windstorm, if the tree blows over and lands on your house, that's going to go under a FAIR plan. That's where it's covered. Everybody always just thinks FAIR plan fire, but it is so much more than that. And also vandalism and malicious mischief. You got a car that drives into your house, that's going to be under the FAIR plan. Well, their car insurance, but they probably don't have enough car insurance either. If you've ever looked at your FAIR plan policy or tried to get anything done on your own, you know it takes a team to get the FAIR plan managed. I have one girl in the office. She does this just about the whole day. We have what, 800 or 900 FAIR plans written in our office. So we definitely know. Don't think that you need to do it yourself. You need to have a broker. Your agent should be doing this for you. Because when we call in, we would call in over, 10 policies at one time. That way, when we're on hold for an hour, it makes it worth it. Yeah.
Have a policy, FAIR plan policy on your house. Do you need a separate policy for your contents?
We're going to get to that. So the FAIR plan does cover your contents. It covers your house. It covers, if you want, other structures, anything that's detached except for an ADU or a garage with an apartment or a barn with a wood stove. Those we'll talk about later too. They need their own separate FAIR plan if you've got a detached. So you could end up with 3 different policies. So it covers the house, covers your other structures, covers your personal property. It gives you loss of use. So if you are evacuated due to a fire, you can put a claim into the FAIR plan. The FAIR plan pays a little bit differently. They just base it on the rent that you would receive for your house. But it covers all of that as long as you have all those things in there. But what it covers for is against fire, lightning, smoke, wind, hail, vandalism, and malicious mischief. So if your house catches on fire, personal property is covered. If it's stolen, it's under the other policy. So it does take a full team, and you're your own advocate as well. The FAIR plan had some issues. If you've got a renewal coming up, like this month, last month, the FAIR plan had some issues in getting those renewals out. We had 25, 30 renewals stuck, and some of them weren't even issued until after the actual renewal date. And since they have a no grace period, they were extending the due dates for people to pay their premiums, but you just got to keep an eye on it. You got to know when it comes. Your renewal should be issued approximately 2 months prior to the actual renewal date. That is not your bill. You'll get your invoice. Invoices are issued 21 days prior to the due date. What we do in our office and what your broker should be doing is they receive an email from the FAIR plan, the date that the renewal is issued. FAIR plan also mails it to you. We know how mail can be. So what we do in our office is we email it out to you. As soon as we get it, we forward the email. That way you've got it, you're under control, you know it's due. So the policy that goes with the FAIR plan. So difference in conditions policy. A lot of people call it the companion policy, a wraparound, a secondary policy. Some people call it the homeowners policy. The FAIR plan's your homeowners policy too. It's protecting your home just against fire, lightning, wind, hail, vandalism, and malicious mischief. So the difference in conditions one is going to cover you against other types of losses. So sudden onset of water, your pipes break, cause flooding in the house, it's going to be under the FAIR plan. Or I'm sorry, under the difference in conditions policy. Drain backup coverage, that's usually an optional coverage on some policies, on some DIC policies. You should make sure you have it. I've seen claims come through with drain backup, especially in the country where you get the roots going through and then the toilet backs up and you got water everywhere. And now all of a sudden you have to replace a $50,000 floor. Theft. If your items are stolen out of your house or, you know, even out of your car, believe it or not, things stolen out of your car are not covered under your car insurance. They're covered under your homeowner's insurance. Subject to deductible, which a lot of people have a high deductible. So it's probably not even worth putting a claim in if it's stolen out of your car. Snow load. I don't know if we get a lot of snow up here. I live in Roseville and I grew up in Penn Valley, so didn't get a lot of snow. But snow load is going to be covered under the DIC. So that tree, if it's laden with snow and it falls over, that's going to go under the DIC. If it blows over, it's going to go under the FAIR plan. And then liability is on your difference in conditions policy as well. Your liability, you may not know, it covers more than just trips and falls at your house. It's called personal liability. So it follows you. So if you unintentionally do something to harm somebody else out in public, I always use the example of, you know, you're out playing golf, you hit the golf ball, it hits somebody in the head, they go to the hospital. Your homeowner's liability will cover that. Speaking of liability too, did you know that the liability on your auto policy helps protect the equity in your home? Because if you don't have enough liability on your auto policy and even the umbrella policy that he was talking about, and you're in a car accident, people can put a lien on your home to pay the rest of their bodily injury on the car accident that you caused. This is the most common thing that's going on right now. Building costs are more than market value. And a lot of up here in the mountains and stuff. Want to buy it? It's still for sale. It's in Auburn. If you want to move to Auburn, and it's a great value because it's only 1.5 million and it's worth, you know, 2.5 to rebuild it. But I'm just saying, take a look at your dwelling coverage. Make sure you have enough there that's going to rebuild your house. If you need to talk to a contractor and find out what building costs are now, you know, per square foot, make sure.
The question is,
So
where
the
does an uninsured licensed worker at your home, if they were hurt and you were sued, where is that covered?
So basically that would be the workers' comp coverage that's usually on the homeowners. So it would be on the DIC. Anything liability wise, you got to think, what's the cause of loss? What happened? How did something happen? And that's will gear you towards or steer you towards which policy.
So what does FAIR plan cover in the event of a fire? Do they pay you market value or do they do dwelling replacement?
Yeah, we'll get to that. Thank you. So if you're not insured to 100%, or I'm sorry, 80% of dwelling replacement cost at the time of a loss. So say the dwelling replacement, just make it easy, is $100,000. And you're insured for 70,000. Your policy, your fair plan automatically gets reduced to an actual cash value policy. If you are in, it's hard to determine because they're the ones that are going to determine what the dwelling replacement cost should be at the time of the loss. So you just try to be as your own advocate and making sure that you're insured to value to begin with. And there's an inflation guard on the policy, so it will automatically go up a little bit every year.
If you're insuring your house for 80% of the value or less than 80%, then they're going to pay you a cash value.
It's an actual cash value. That means that, let's say your house is 20 years old. They're going to pay you for a 20-year-old house. They're not going to rebuild it. So on a loss right now, if you have the fair plan, or just about any regular policy even, when you have a loss, they're going to calculate out the actual cash value or the depreciated value. Same thing. And you're going to get the money for the depreciated value. As you're rebuilding, then you hand in your receipts and your work orders. And, you know, if you have a contractor, they're handing things in and they're showing, okay, you know, it actually did cost this much to rebuild. So then you'll get the difference back. I've seen fair plan claims come through and they send you a letter and they say, okay, this is the depreciated amount. Here's your check. Now, there's a amount that they've held back saying this is how much is depreciated. Once you finish the work and you hand in your secondary claim, you'll get this much back. So they do end up paying out the whole thing.
Yeah, if I could just, we need the fair plan. It's the insurer of last resort, and there's nobody writing right now, and it's massive. There used to be 6,000 agents in the state that sold it in 2019 before the Camp Fire. There's over 100,000 agents that sell it all over the country here. They look at 7 square mile areas. Nevada City is almost $9 billion worth of loss within 7 square miles right there alone. They have all the worst risk in the state of California right now, which is not a good thing. It's like having an insurance company that only insures people with 3 DUIs, right? And multiple tickets. It's the worst risk you can have, right? So
We don't insure those.
it is a perfect storm that we need. Everybody understands it. Department of Insurance, politicians, we need to divest from the California Fair Plan. I'll give you a quick example. So with an all-state policy, a state farm policy of farmers, all the admitted carriers, right? 2022, we had the river fire. I had a client that had a total loss on their house. I had people that had fair plans with total losses on their house. It's a completely different deal. With the person that had the all-state policy, they were older. They weren't used to things. We set up on text, direct deposit. They came in the office. Within 3 weeks of the fire, we had deposited 50% of what almost all of their coverages were. The fire was August 1st, September 14th. Jerry's a big guy. He passed away last November, unfortunately. But he comes into my office. I have another client and he has to bend down as he comes in the door. He goes, I have over $1.4 million in my house. Is that you? I mean, in my checking account. I just came from my bank. Is that you? I'm like, well, Jerry, come on in. Are you okay? And he's like, yes, but I need to know if I need to withdraw that quickly. I'm like, well, sit down. And I brought it up and I went over his policy, and I'm a numbers guy. So $792,000 is what we had a dwelling replacement. His home was probably worth 800 grand alone, right? So we had deposited 50% of that on August 10th or so. On September 14th, we deposited the rest of it. So we had $792,000 and some change in his checking account at that time. We deposited 100% of his personal contents, which was 70% of 792. It was $565,000. We did 50% of it on August 10th. The September 14th, the other money hit that account. Then we gave him, we have what's called additional living expenses. They call it a fair market rent and fair plan. I don't mean to dismiss you like that. We didn't pay out the whole amount. We gave him 50% of it. Now, had it been a Paradise LA, we would have given him the whole amount. It's 20% of 792,000. It was $144,000, right? Because we know you're not going to be back in that house in 2 years. We know it's not going to happen. I tell people, if you're part of a catastrophe and there's a whole bunch of homes going, go to Europe. Just get out of here. You don't want to see that. You don't want to try to do anything. Just get out of here. Take the money. We had clients in Paradise. They lost their home in end of 2018, in November of 2018. They bought a house in Grass Valley in early 2019. They sold it last year for about a $300,000 profit, you know, from 19 to 2000. And they're living on a fifth wheel, finishing up their home in Paradise now. And that's 7 years ago, that fire, right? Coming up in another month or two. So, so there was he had $1.4 million in his checking account. He still owned the land. How big of an area? What do you mean? What do you mean? Oh, no, I'm saying the FAIR plan, look at their risk in that 7 square miles. We don't have the impact that we used to. Nobody has the impact up here. No, they know what their risk is in those communities. Allstate lost $1 billion in 2018 on the FAIR plan, and they paid it out quick, right? My point is we need to get back to these other policies. Now, did they have to rebuild their home? No. They could have kept $1.4 million, kept the land and said, we'll let the kids worry about it. We'll go somewhere else. They could have bought almost 2 of their homes for what we gave them on when we count up everything that they had, right? And then they would have been dealing with, you know, flat tires from construction, you know, all the other things and everything dead and falling and the widow makers and all that stuff. So we need to get back to we have regular policies that have that kind of payout power. You don't, I had 3 losses that were FAIR plan. And I really thought this guy was going to commit suicide. It's type A. They weren't paying in time. The underwriter was in Hawaii initially. Then the other one was from Idaho. And then that one was getting divorced and they lost all the paperwork. And he was just going crazy. It never would have happened with another admitted carrier. It just wouldn't have happened.
It
The
does get
stress that was there.
delayed, but it is a replacement or rebuild type policy as well. So if you do just want to go buy another house, we did have another couple that did have the FAIR plan. They didn't have it with our office, so I'm not familiar enough with that claim. But then they bought a new house in Auburn and just used the money to buy the house and then got the FAIR plan again. And they are in there every year to pay their bill because they know how important it is. I did want to go over these really quick, though. I'll get to you in just a second, huh? But yeah, I just want to go over these really quick. We all know that the FAIR plan has discounts. The FireWise discount is going to be 10% of the portion of the premium that is related directly to wildfire. That's why it doesn't look like it's a full 10%. It's not 10% off the bottom line. It's 10% off of the portion that is directly related to wildfire. They have the other 2 discounts, the home hardening discount and the, what is it? The building hardening and the immediate surroundings hardening. Up until now, you have had to have every single one of those items check marked to be able to qualify for the discounts. They just announced today that starting November 15th, it is going to be a tier. So you don't have to have every single one. You mark off the ones that you do have, because the home hardening one, you have to have enclosed eaves, which kicks almost everybody out, but you have to have a fire rated roof, which most people have. You have to have, you know, the dual pane windows, which most people have, but those eaves was kicking everybody out. So starting November 15th, you can reapply for the discounts on an individualized basis. I don't know what each percentage is going to be or anything like that. They say it totals, if you get everything, it totals about 16%. Because if you do mark all the boxes, if you do qualify for everything, which if you do qualify for everything, you should have the discounts already. But then you get an additional little discount bonus if you qualify for everything. That being said, like I said, they have the discounts. I don't know how much it's going to be. So some of those things that you don't already have may not be worth going out and getting if you're just getting it for the discount. If you're getting it to go ahead and protect your home, like what she was saying, then definitely get it. And it's a little bit of a bonus.
Hey, Deidre, let me just say that everybody, I'm not sure about Tanya and Deputy Bear, but everybody in the audience should be in a Firewise community. I'm not, Kent, is yours approved yet? Yeah, so everybody here, based on what you told me when I asked where you lived, is in a Firewise community.
So that is its own individual discount. If you're in a new Firewise community and you go to apply for it, the Fair Plan is now automatic to where it will say, okay, they're in a Firewise. So, and it doesn't show on your deck pages, your declarations pages that you're getting the discount. You actually have to call your broker. They have to go into the policy and make sure that it's checkmarked. But the Fair Plan does recognize that on new ones that I'm doing now, even if I say no, it's not a Firewise, it'll pull through and say, yep, it's a Firewise. It's, oh, great. But if it is a new one and you're trying to get that discount on an existing policy, give your broker your certificate, but also give them the map of the outlines, because we've had issues with newer Firewise communities in Nevada County. The Fair Plan will decline the discount because we gave them the certificate, but we didn't give them the outlining map. And just a really quick things, the biggest thing on here, you can go to the Fair Plan website and look up your policy. You can see if it's active, you can make a payment on there. There's not a whole lot of other stuff that you can do on there. They don't take automatic payments. It's not bankrupt. It does have a lot of risk, but it's not bankrupt. If you have a trust, make sure your trust is on your policy. That was a big issue in the Palisades fire. Work with an agent that has experience. You don't need to do this on your own, and work with an agency that has a good big staff to take care of these. You shouldn't have to deal with the Fair Plan on your own. That's what your broker is there for. And the biggest thing, every single home is going to be different. You cannot compare your policy or your premium to your neighbor's. The Fair Plan is going to be the same price no matter where you go, as long as the coverage is being quoted the same and written the same. But if your neighbor's paying, oh, I'm paying $1,200, he might be underinsured, doesn't have any personal property coverage on there, you know, has a $20,000 deductible. You never know what's on there. So you can't compare prices. You got to compare the full policy. And that being said, too, each property, the Fair Plan has a new AI system as far as rating the dangers and the fire risk and everything. So it is property specific now. I'll work in some neighborhoods. I have 4 houses in this neighborhood, Winchester, up in Auburn. Each house had a different score, and they were maybe a half mile away from each other. So that's it. I'll let you guys go home unless you have more questions.
All right, good job.